Welcome to the Pirls Stock Market Commentary video for September 18th, 2016. Market breadth. With this past week's market advance, our bull-bear point and figure ratio fell to 1.23 from 1.61 last week, continuing in bullish territory. The total count of securities in bullish or bearish patterns decreased 3% to 3,029. The count of bearish stocks increased 14%, while the count of stocks in bullish patterns decreased 13%. The Pirls PNF Market Breadth Summary chart shows us a market now 12 consecutive weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking membership, clicking register, and following the prompts. To receive the Pirls Stock Market Commentary via email free of charge, simply enter your email address in the space provided. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 111 points for the seventh decline in 7 weeks. At a positive 371.50 points, it continues below the recently formed August 2016 top, the April 2016 top, and continues above all remaining 3 tops above 100, and it continues above all 6 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 3 accumulation days and 3 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Nasdaq ended in distribution mode on higher average daily volume. Momentum, now risen to a positive 35.75 from a minus 269.54 a week ago, after 4 days below zero. The CCI 20 daily is back within the plus or minus 50 range required for a valid zero-line reject long entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 20 weeks ago, while the daily CCI 20 began a Woody's uptrend 9 weeks ago. At Friday 9/9 close, the CCI 20 weekly fell to a positive 78.29, dropping below plus 100 to exit from the zero-line reject long entry signal formed Friday 7/8 close. The result of this Monday 7/11 open to 9/12 open trade simulation was a gain of 121.49 points on the Nasdaq Composite, or $2.97 per share of QQQ. The CCI 20 weekly is now at 77.05, outside the plus or minus 50 range for a valid new zero-line reject long entry signal. Industry rotation, the last 2 weeks. 2 of the top 5 industries are positive, and all of the bottom 5 are negative. Summary, some tech on top, gold and silver, REITs, and oil services on the bottom. Bullish, computer hardware continues in the top 5. Semis has left the bottom 5. Comp tech has entered the top 5. Oil services continues in the bottom 5. S&P retail has left the bottom 5. Disk drives has left the bottom 5. Gold and silver has re-entered the bottom 5. Bearish, REITs has entered the bottom 5. KBW Bank has left the top 5. Focus this week from www.zerohedge.com. Well, That's never happened before. The brief but very important article by Tyler Durden with charts is reproduced below. In the history of data from the Fed, this has never happened before. Aggregate auto loan volume actually fell last week, and less loans means one simple thing: less sales, because prices have never been higher and no one is paying cash, which is a major problem since motor vehicle production continues to rise as management is blindly believing the Obama narrative that everything is and will be awesome. The problem is, inventories are already at near record highs relative to sales, which are anything but plateauing. In fact, the last time inventories were this high relative to sales, GM went bankrupt and was bailed out by Obama. The big picture here is simple. U.S. automakers face a plunge in auto loans for the first time in this recovery, and with sales plunging and inventories near record highs, production, that is labor, will have to take a hit. And that plays right into Trump's wheelhouse and crushes Obama's narrative just weeks before the election. Thank you for viewing this week's Santu Pirls Stock Market Commentary video featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart, compiled by Donald Pirl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant autumn weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.